All right. Hey, how y'all doing today? All right. So today we are going to be talking about financial management. Again, that's financial management. And this is relation to business owners, right? So, in relation to business owners, we're going to be talking about financial management. And today I'm a little bit more organized. Thank you, Lord. So, today I'm a little bit more organized. I'm a little bit more, um, you know, uh, enclosed today, at least for the most part. I do want to go ahead and draw your attention. If you are at work and you're listening, I will leave the live posted. Actually, I do want to say that some of the posted material, I thank you for your views, your likes, your comments. And actually, I'm going to wait a moment, actually. So give me a moment. I need to. I need to do something before I get started. So y'all bear with me a moment, okay? Okay, so I'm back. All right. All right. I did hear about that, Tim. All right. So those some old messages. All right. All right. So anyway, getting back to the subject, in regards to financial management. Okay. So we're going in. All right. We're going in. And here, the objective, of course, is going to be to make sure that you understand the concept of financial management and why it's important to a small business. We also want to identify financial management practices, rules, and tools that are commonly available to a small business, right? We want to definitely make sure that we explain how these financial management practices, rules, and tools work. You want to understand, how they work, how to use them, the rules, what are the rules and practices, right? And then we want to make sure that we explain management basics for a small business, right? Also, the basics of startup financing, the basics of financing for growing business, the basics of financing for working capital, and the basics of financing fixed assets. Okay? So, the first thing that we want to focus on is I want to go ahead and, again, welcome you to financial management. Today we're talking about financial management. Again, by taking this or listening to this live, of course, you are going to definitely, be taking an important step toward building a better business, or, checking your building blocks to make sure that everything is where it needs to be based upon the information that I will provide to you on today. Okay, so definitely have a full agenda today. Definitely will not have time to cover everything in regards to financial management, but fortunately you can get additional information if you would like it. All you need to do is just pretty much put in the comments that you want the information in regards to that we're going to be going over on today. Okay, so, and I definitely encourage you to go ahead and put in the comments that you want a copy, whether you're listening or you missed it or whatever. Someone that may need the information. It's always good to have information and resources that are, beneficial to you. Right? So again, the objective here is to go ahead and review all of this information, of course. I do want to definitely go ahead and explain the concept of financial management and why it is important to a small business and its owner, right? Identifying financial management practices, rules, and tools commonly available to small businesses, explaining how financial management practices, rules, and tools work, and explain financial management basics for small businesses, including startup financing for growing businesses, financing working capital, financing fixed assets, right? So we want to make sure that we are all on the same page. So the first question is, what do you know? So what do you know? Before we begin, we do want to find out what do you all know. So if you are listening, if you are chiming in on the live, just type, what do you know about financial management? Just help me out. Give me some interaction here. What do you know about financial management? You know how to spend money, right? We know how to potentially make money. We know how to have access to that money, right? Most of us know how to pay bills and pay them on time all the time. And then some of us, I think I see a request coming in. Do it again. I didn't catch it. Okay. I got you next time if you do it again. So we all know something about money. We know something about finances. We know something about managing that money to a degree where it will somehow benefit us to be able to do what we want to do as it relates to a personal level. But in this case, our focus is on a business level, being able to manage our finances, right, as a business owner. Okay, so we want to understand what we know. Okay. All right, so let's go and briefly talk about, the benefits of financial management. We know what we know. Let's talk about the benefits of financial management. Quality financial management offers many benefits, as we know, to us as a business owner, right? So financial management includes, right, bookkeeping, projections, I'll break that down, financial statements, and financing, which forms the foundation for reaching your goals through sound business decisions. So all of this forms, in other words, the foundation for reaching your goals through sound business decisions. And sound business decisions comes primarily based on money, right? Everything is going to be based on money. Okay, so financial management also is one of your main avenues to success as a business owner, right? Because if you're not making money, then you really don't have a business. That's just the bottom line. Financial management is the way you know if you are making a profit. We want to know if we are not only in business, but that our business is actually making a profit. Okay. Financial management helps you decide what you can afford in terms of store or office location, inventory purchases, employees, and equipment. You need sound financial information, right, to set your prices and select your vendors. Financial management gives you, right, the tools to plan for overall business growth with your financial management. Okay. Not only for business growth, but for diversification of your product lines, meaning having diversified products, right? Or for reaching new markets as well. Okay. Financial management helps you decide which products, services, and markets are profitable. Okay. Effective financial management gives you tools to chart your course into the future, adjust your direction when needed, and help you find your way through challenging times. And of course, right now, we have been in one of the most challenging times, especially for business owners, especially for those who are new to the business as a whole. Those who are looking to become business owners, is very challenging to look at what is currently going on right now in the business world and wanting to still pursue having that desire, that urge, and the motivation that you need to be able to do so is very crucial in this time right now that we're in as business owners. So it's definitely, crucial to have your financials together. Now, if your business growth requires financing, such as loans, right? Financial management provides the information to know how much you can afford for your business. Financial management gives you not only the documentation needed for a loan application, which is what I always have been preaching, to have a financial folder in your records, have a financial folder that's dedicated to finances Everything in here will get you a loan in a matter of moments. When you go to the bank, that's the only folder you take with you. When you go to the bank, even if the file is on your computer or on your phone, wherever that file is, it needs to always be continuously updated and notated with the information that will get you what you need for your business, right? So you always want to have, your financial information, because that's going to pretty much be how you are eligible for loans, lines of credit even. So you always want to have your documentation needed for a loan application, but also helps you discuss your business circumstances with a lender in terms that improve your ability to qualify for the loan. So not only is it a factor of you getting the loan or not, but it also helps the lender to look into your business from the financial standpoint to see how you can qualify for this loan. You may qualify for more money because of the way you have been keeping your financials in relation to the documentation, right? So let's talk about budgeting. Budgeting is a definite crucial knockout to most business owners, because all we know is we have X amount of dollars that we made, and we don't calculate back, on how that money needs to go back into, or how we're going to spend that money, and how much money we actually need to have in the account to be able to spend XYZ amount of dollars. We always want to be sure of what we are spending. So creating a budget is going to be the first place to start with your financial management practices. Okay, a budget is going to be pretty much a list of all of your monthly and yearly expenses. Okay, I'm saying your monthly and business expenses needs to be a part of your budget, because what that does, it helps you, and I previously said this in another video, and you can always go back and watch that in regards to business financials is what I named that video. So you can always go back and watch that. That one pretty much said the same thing as far as the yearly costs that you incur. So you want to make sure that when you're doing your budget, that you include those yearly costs that you have to pay yearly. That includes things simple as your annual filings renewal. So you have to renew your annual filings, that LLC that you paid for, that incorporation that you paid for, that DBA, that doing business as name that you paid for, that trademark that you paid for, whatever it was with your state, right, that you paid for, you have to pay annually to keep that up to date and new. Okay, so if you take $250 and you divide it right through the year, that means now you understand, right, that $250, right, actually is broken down for the year, and now you every month you put money aside into your account for expenses to make sure that you have that money at the end of the year. So when the end of the year comes, you're not scavenging and looking for how you're going to pay that $250. It's already taken care of, right? So that is done. So again, your budget needs to include your monthly and yearly expenses. It needs to be organized by categories, right? The budget is going to be the tool, the first and foremost and important tool that is going to help you as a business owner, right? So there are definitely several financial management practices and tools that are commonly used for small businesses. And this one, like I said, it's going to be budgeting. The first one is going to be budgeting. Now, what does it help you do? What does a budget help you do? It, first of all, it tracks all your business expenses, so you know what business expenses that you have, right? Let me throw myself under the bus for a moment, right? You know, we talk about business credit here at Next Level Bound Workshops Incorporated, and business credit is an important factor, right? And you need to make sure of vendors that you use or accounts that you have open under your business if they are reporting to your business credit profile. It's important to know that, because in the event of a situation like I have or had, right, you will know where those expenses are coming from and who's reporting and who's not reporting on your business credit profile. So again, going back to this budget, if I have the accounts and I have the expenses written out, I automatically know who I owe and how much I owe and for what service is it that I owe them for, right? And again, throwing myself under the bus, I had a situation, something was reporting on my business credit profile, didn't know what it was, didn't know why it was. However, I knew that whatever it was reporting, and it was negatively reporting. So I called every other place that I knew, and the one company that I know that it is or was, they told me, oh, we don't report to the business credit profile. And I was like, okay, so you're the only one on my accounts. And I know this because I keep a tally. I keep my budget. I keep a written out, situation going on. So I know what's going on with my accounts. What accounts do I have, how much they are, and what it is that account does for me, right, as a business owner. So I know that it was them. And also, when I went further in a couple of days ago to check the account, just to get the free version of that particular account, I noticed it said that, account suspended, we've been trying to charge. And from what I was initially advised when I got the service, which I thoroughly asked, because again, I specialize in business credit. So I know that me personally wouldn't want to do anything that would show negatively on my business credit profile. So I knew already to what questions to ask, and how to ask the right question to get the correct response, However, apparently either someone lied or someone was not informed correctly or whatever. However, it was actually showing up on my business credit profile. And because it was, now I had to take other steps to get that resolved. But this is because not necessarily because I didn't budget, but because apparently I was given the wrong information. And I do want you to note that no matter if they are or are not reporting on your business credit profile, you still want to make sure to the best of your ability to pay your bills on time, all the time. Say it with me, on time, all the time, period, point blank. It doesn't even really matter. But if they are not, if they tell you that they don't report to the business credit profile, right, then they should not be reporting to your business credit profile. They should only be pretty much taking your money for this account, and that's it, and that's all. If you don't pay because it's a month to month or pretty much a subscription, as to where that if you cancel, it's just you cancel, there's no contract or anything like that. It's just a month-to-month type situation for services. You always want to make sure that they're not reporting, because if you ever stop, you don't want them to report that you stopped and now your business credit score is going down. I did want to put that nugget out there because, again, that did happen to me as we are talking about tracking your business expenses. Okay, plan for the future. Make sure that in your budget, you are planning for the future. That includes raises. That includes pay increases. That includes additional products and services that you want to have in your business. That includes anything that's not happening today. That includes anything that's not happening within the next 3 months, right? Anything in the future that you want to plan for. Also include the idea of, for an example, there is a cargo van that you need to purchase for your business, right? You want to buy it cash, but right now, the way your budget is set up, you can't do that, right, this month, right? So you plan, how are you going to then get the cash that you need to be able to get that cargo van? So you set up your budget in a way that it meets you right where you need it to, right? It meets you where you need it to. So at the end of your budget, you actually are able to buy that cargo van that you need cash with no payments and a nice van, right? We don't want anything with high mileage. We don't want anything, right, that's gonna, not take us too far. We want something that's nice. We want something that is affordable, yes, and we want something that will actually be of quality to our business, right? So when we pull up in it, people are not giving us we're not given a bad impression in regards to what we're driving in. So plan for the future. Economize when you need to. In other words, break that stuff down. Find other ways around paying so much for services, right? Plan for expansion. Plan for expansion. Plan to grow. I want to put that in your spirit. If you're working from home, plan to grow to work in an office space. If you are a business operation and you only operate as one, right? Plan to grow. Plan to have another person working in your business. Okay? Plan. Make a profit. Okay? In your, excuse me. Excuse me. In your business budget, make a profit. Cotton. Make a profit. Make sure that you create a spot on your budget to show a profit. Okay? Once you create a budget, use it to compare what you have budgeted with your actual expenditures, right? With what you actually have going on now. Not what you have written the budget for, but what you currently have going on, right now. Compare that budget to the here and now, right? So I'm going to kind of pull this. All right, and I'm gonna do a show and tell on this one, right? Because this is for you guys, right? So this is discussion, and this is regards to, I'm gonna put it for everybody to see. You might see it backwards, right? You might see it backwards. Okay, so what budget categories do you guys use? How do you even currently keep track of your monthly expenses as a business owner? How do you do that? And then this is also, maybe you have Excel and other sorts or whatever, but this is just a sample of something that you can utilize something to go by, because you need a budget as a business owner. You need to know how you can maximize what you have. You need to know how to utilize what you currently have. So again, if you want a copy of this information, right, just put it in the comments, say send me a copy with your email address, or DM me your email address, but put in the comments, send me a copy. And I will contact you either way if I don't see an email address, and I will go ahead and email you a copy of this document. I will not post it. I will only send it via email. So if you want it, just let me know, and I will go ahead and email the information to you. Everything that we're talking about thus far is definitely valuable information, and I do want you to have it, right? And everything. Okay, and so budgeting is definitely, again, critical. It's definitely important, and it is the most important component of financial management, right? Without a budget, your financial management is it's hogwash. It means absolutely nothing. Once you have created that budget, and on this, I'm going to go over this briefly. Okay, I see. All right, while I'm waiting for you, okay, I will continue. So on this sheet, it has rent, utilities, telephone and internet, insurance, right? Employees or contractors, office supplies, inventory purchases, permits and licenses, dues, memberships, subscriptions, income taxes, owner's draw, travel, interest, bank service charges, postage, legal and accounting, and then it's other. So you can set this up however you want, right? You can set this up however you want, but initially it's telling you the things that you need to definitely include on your budget, right? You need to include these things on your budget. So with that being said, like I advised also on the previous video, you do want to add tithe and offering to your budget. That's not a requirement necessarily, but if you want your business to be successful and blessed, if that's where you walk, that's awesome. I'm just telling you to tithe and also pay your offering. An offering is a penny over whatever your tithe is, right? So however you do that, that's on you. That's your business, not mine. I'm just here to help you and assist you. And if you want your business to be successful, more successful than the average of success, then I'm telling you now, that is the way to go. But if you don't listen to me, that's fine as well. Run your business. Just make sure you have a budget to do so, right? So, moving right along, right? I'm not a preacher trying to preach to you about tithes and offering. Your pastor didn't tell me that you weren't paying your tithes and offering. Okay, so we're going to skip right along to bookkeeping in regards to your financial management. Bookkeeping is the organized process of tracking all income and expense transactions. Bookkeeping is pretty much the most critical component of financial management aside from your budget, which leads to better business decisions. Regarding financing, taxes, owner's draw, and retirement. Retirement? As a business owner, I could retire? Yes, you absolutely can retire from your business. as a business owner. You can actually set up your own retirement fund as a business owner, right? Taxes as well. You can pay into your Social Security, which means that you can also not only retire from your own retirement fund, but also collect Social Security as well, as so long as you pay taxes as you're supposed to the Social Security, right? And then the owner's draw is pretty much another way to say the owner is getting paid. Okay, interest is come into play because I know that I did say interest. Interest comes into play on a number of things. One of the main things is going to be interest in loans or anything that you got financed. Want to talk about that interest outside of the actual loan. So if the loan was $5,000, but the interest rate was 20%. Then you want to include that in your interest, as well as your interest in the company, right? The interest rate in the company. And that's getting more toward stocks and things of that nature. All right. So the first thing in bookkeeping is what I tell y'all, what I've been saying, what tells a financial institution, when you're trying to go get some money or get a credit card or what have you, what's the first thing that they're looking for you to have? A business checking account. The first thing you need to have is a business checking account. Period. You need to first have a business checking account. Then you need to have a business accounting software. I always recommend the one here, QuickBooks. Okay, so I always typically recommend QuickBooks as the reputable resource in regarding bookkeeping. QuickBooks is mobile. You can use it on your desktop. You can snap pictures of receipts while you're out, credit card transactions. I also actually have Brett's, which is a financial management system plus business account type ordeal here. And it definitely helps me and makes me stay on track and on point in regards to how I spend my money. So I have to upload receipts. I have to put in a memo if the transaction is not clear as to what it was for. I have to put in a memo, so it holds me accountable, to what am I spending money on, why am I spending money, how much money am I spending, can I show proof of the money that I spent, the purpose of it, can I show a receipt for it, and was it business related, So this helps me because at the end, when it's time to file taxes, I don't have to scram to find receipts. All I have to do is go to my Brett's account, put the information, it populates everything, it prints out all of the receipts and transactions and everything. So every transaction, literally, I'm supposed to provide a receipt for that transaction. So same thing with QuickBooks. it does the same thing. It has the snap. You could just snap a picture and it'll, upload that receipt to your account, right? And at the end, when it's time for you to file taxes, QuickBooks goes further and actually pretty much prepares your taxes for you as a business owner, because now you have already shown how you have set up everything is in place, all of that information has been accounted for. So again, in bookkeeping, part of financial management, the first thing you want to have is a business account, and then you want to go ahead and get your business accounting software. You want to get a business accounting software. Unless you have a business accountant, someone who is a certified public accountant, then go ahead and use them if that's what you want to do. If not, and you want to take a more economical way of doing things, pay for QuickBooks, and have QuickBooks to do that for you, right? The next thing is we want to go ahead and reconcile our checking account. Each month, we want to reconcile the checking account using the business accounting software, right? This is pretty much, like I said before, it's just uploading those receipts, checking every transaction to make sure what has been done, to make sure the charges and transactions that have taken place, you can account for them, you have a receipt for them and everything, right? Track sales. Track sales, create an airtight system for tracking sales using tools such as a register tape, invoices, and a sales book. Always use this sales tracking system. I tell let's talk about this. Excuse me. Let's talk about the purpose of tracking sales in regards to bookkeeping, right? The purpose of tracking sales, first and foremost, is to show that you are in business. That's real simple. Having Cash App is good. Having Zelle is good. Having Venmo is good. Having Apple Pay is good. However, you need to still do an invoice. An invoice does a few different things, but we're only going to focus on 3. The first thing that an invoice does is it tells any lender or creditor or whoever who's wanting to give you money or can give you money, it tells them that pretty much you are in business and you have clientele. Whether or not they paid in full or not, you still have that debt showing on that invoice that they have a balance. This is their balance, and this is how much they owe. It tells them that in a nutshell, you can make money. Your business is making money. That's what the invoices first and foremost do across the board, right? Without having to do all of the, let me go through my Cash App and look at the transactions that was for this, and then look at the transactions. Let me mark out the transactions that were personal. Because what that's telling a financial institution or someone that could possibly give you money, that's telling them that you have your business and personal connected. And that's never good. It's never good for a financial institution to understand that you don't have a separation when it comes to your financials. They want to see that you, first of all, are responsible, and they also want to know that you are capable of separating your personal from your business. This helps them to understand that you are not only responsible, but you're organized, as a business owner, and that potentially they're going to get their money back. They don't want to lend to you and you don't have a good tracking system to track your sales to show them the money. They need to see that you're making money, right? So that's the second thing. The final thing that it does is that it helps you, right? Whether you believe it or not, it helps you. It helps you first off know if you have 100 clients within a month, just 1 month, you have 100 clients, and all of them somehow have, let's just say not all of them, let's say 50 of them have an account balance, right? But you're not necessarily aware of that necessarily because you have so many clients within the month. It's not as obvious that they didn't pay the full invoice. Let's just say that you use PayPal, they didn't pay the full invoice, but you didn't really notice it or anything, right? But you need that money. Well, this helps you because now you can take those invoices and actually go to a lender that actually gives money to you based upon your invoices. So let's say you had, for an example, out of the other invoices that you had that was unpaid or partially paid, wasn't completely paid, let's say it was a total of $10,000 that you needed, right? $10,000 is a lot of money, but it's not accessible to you if you don't have proof that that money is owed to you. So when you have proof that the money is owed to you, now you can actually take those invoices, print them out, or take them individually and do a PDF file and actually submit them to a lender who will actually lend you money and take over those invoices for you, right? Pretty much buying that debt from you and then giving you the money, okay? Giving you the money that you need to be able to continue on with your business, right? So this is why I never necessarily push my clients to pay their full balance, not because I don't want to make money or not because I don't need my money, but because if I do come to a dire need of needing money, I know that I can take my PayPal invoices, print them out, and submit them to a lender who actually will give me money because I have invoices that are unpaid that are from actual clients, right? Not anything fraudulent, but actual clients. And that is the three things that invoices will do for you. So again, the first thing the invoice does is tell creditors, lenders, and financial institutions who you potentially want to recognize you, lets them know that you are making money. Second thing is it helps you. It helps you to pretty much keep track of your business. The third thing is it helps you again by putting money into your pocket if you need to get a loan or to get those debt from you. You can take it to a lender who lends based upon invoices, and that invoice lender will then give you the money that is due to you, right? That is due to you based upon the invoices that you have, right? And then they are able to give you that money. So those are three things that invoices can do for you if you do it. Some of y'all won't because you'll say it's too hard, it's too complicated, even though the service is free, right? And that's what Next Level Bound Workshops is here for, to help you to actually navigate, right, those services. So if you need help, I'm here to help you. Not talking down, I'm encouraging, right, to get this done. We want to get this done. We want our business to be successful. We want our business to make us money. We want our business to make us millionaires. We want our business to make us financially stable and capable to do what we need to do in life in general. But in order to do that, there are things that we have to do to make sure that we're meeting those goals and expectations that we've set for our own selves. Right? So moving right along, track your sales, deposit all sales. Deposit all sales. Deposit all sales. If somebody pays you $50 and you have the $50 in your hand, do not spend the $50. That is not your money. That money now belongs to whatever your business name is. That's who that $50 belongs to. Just because you're the owner, just because you own the business, it doesn't make it your money as soon as you get it, and then you can go spend it on whatever you want to spend it on. That is not how this works. If you want to see a major increase in your revenue, in your business, in your income, right? To be able to do what you need to do in your business. If you want that, that is not the answer, right? Deposit the sales, right? Using the duplication deposit slips, deposit all sales in your business checking account. Alternately, you can do remote deposit capture, right? The one where you deposit a check, right? Via mobile. If you have that capability for your account, do not spend cash sales. Link all forms of sales documentation, such as invoices, cash register tapes, and sales books with a specific deposit. So again, on my PayPal invoices, I typically will go ahead and include any type of information that I need to include to tell me what this sale was about, what this money was for, and everything. When I invoice the client, I typically try to make sure that I invoice them in detail what I'm invoicing them for, the services that are going to be included in regards to whatever price tag is on that invoice. Because again, it's telling my creditors that I'm doing business. This is the area where I'm doing business. This is how much business of that area that I'm doing. It helps me in so many different ways. But again, you want to make sure that you deposit all sales. Write business checks for all business expenses or use a business check card. Do not use a petty cash system until you are experienced at bookkeeping. If you are going to use petty cash, or if you're going to spend cash on anything business related, please make sure that before you do it, write it in your books. Also, make sure in these cases that you have a receipt book. Have the receipt book. Create even a sheet or a document, and maybe I'll also include that as well in the near future, a document that pretty much details what this money was spent for, what day it was spent, how much money was spent, because you need to know that. So when you're doing your books and you're trying to balance off why these $500 is not adding into, then you'll be able to have that documentation, because if it's cash, that means you're not getting a receipt. So you need to write yourself a receipt in your receipt book, and also write that documentation up to know what it is that you are paying and everything like that. So you can keep track of it and it's documented, right, into your books. But to the best of your ability, I don't like dealing with checks, so I typically don't write checks. If I do a check, it's going to be bill pay. So that is going to be something that's going to go to whoever it needs to go to in regards to that expense. I typically try to use my business card, whether it's the virtual card or whether it's the physical card. I try to do that because it helps me just not have to deal with checks or have checks lying around and all of that great stuff. So I don't want to deal with checks. Okay? So obtain a separate business credit card. Do not mix personal and business expenses on one credit card. Do not use the same credit card that you use for business as you do use when you're paying for your Netflix subscription. Okay? Unless that Netflix subscription is for your business, then it has no place on your business credit card expenses. Okay? Again, I say the whole idea of business financial management is to rip your personal finances from your business. Right? They have no place to each other. Right? And also, as far as the business credit card and everything, that's something that we cover in business credit management. So business credit management, we actually also talk about this whole ordeal, financial management, but we also focus in on the business credit cards because you want to use you really want a business credit card that's tied directly into your business. That tends to help most business owners control the urge to spend money so freely as if it was for their personal expenses. But that business credit card helps you because it then takes you from spending money out of your personal pocket, right, going back into your actual business. And then typically you want to get to a place where that is not impacting your actual business income, as far as your personal income or your personal status with your personal credit. You want to actually get a business card based upon your business credit, period. If you have to do a personal guarantee, you want to find out if there would ever be a possibility to have that personal guarantee turned completely over to your business credit profile, meaning that you will now be able to report primarily only on your business credit profile. You also want to find out what impact that will incur in regards to your personal credit, because remember, with personal credit, there's so many different ways to increase your score, and there are also so many different ways to decrease your credit score. So by taking a $25,000 credit limit card that was for your business but tied into your personal could definitely cause a detriment, right, to your personal credit score. So you do want to find out a way to do that is not going to impact you negatively on your personal credit. Okay, so that's that in regards to the business credit card. Then pay business expenses first. Pay business expenses first. Pay business expenses first. Okay? Most businesses start out as a sole proprietorship. In sole proprietorships, right, you, the owner, do not get a salary. Rather, you take an owner's draw. A common question is how much draw to take. Here is a rule of thumb. Sales pays for business expenses first. Personal expenses second. Okay? So, with that being said, that pretty much means, in layman terms, is that We're typically, now this information is for all business types, by all means, okay? However, if you have an incorporation or an LLC, this definitely is not a rule of thumb for you, because you have additional expenses that you need to take care of in regards to how you are working with your money when you get it. Again, what I said before, if you are, a tithe payer, right, a tithe and offering payer, or a contributor, right, or you follow that rule, should I say, rule of thumb, right, then you want to do that first, okay? You want to do that first in your business, right? And that's something that you want to do right off the bat, period, point blank. You want to do that. Once you do that, pay your business expenses. Y'all listening to me, y'all looking at me like I'm crazy because I said that like that, but I'm telling you right now, I challenge you to do it. And if your business does not become more successful, then, hit me up and we're going to figure it out. Because I'm telling you now, I have not had an issue to the capacity that I've had to worry about finances. I have not had to worry about finances, and I know that I'm not that good. So all glory to God, right? So with that being said, finances, right? Pay expenses. Most businesses start, right? Like I said, as a sole proprietorship. So this is for sole proprietorship, LLC, incorporation, partnership, all of that. This is all for us, right? But pay your expenses first, right? Run a profit and loss statement, right? A checking account balance is not a good indication of how much profit the business has made or what amount is available for the owner's draw. Again, the owner's draw is another way or term to say your payroll, how much you're going to get paid, your pay cut, how much you're going to pay yourself, right? The profit and loss statement can provide, right, a better picture of the financial health of your business. Okay, so that profit and loss statement, right, is something pretty much in a nutshell that's telling you from month to month or week to week how much money you brought in, how much money you owe out, how much money you brought in, and how much money you owe out. You need to understand how much money you brought in and how much money you have going out. Once you see the health of your business and you see, how much you're able to pay yourself, right? And remember, I talked about this previously when I said business financials, and my primary point that I was trying to make in those videos, for those of you that did not see it or have not yet seen it, or have seen it and maybe you didn't understand where I was coming from, my whole point was in that video was to point out that in the event that we say, I want to make, $100,000, I'm talking about me, right? That I want to bring home $100,000 in my personal account. As a business owner, that means that I have to multiply that times 3. Because remember, I was saying that you need to have 3 accounts set up. You need to have your incoming account. You need to have your payroll account. And you need to have your expense account. So that means if I want to make $100,000 for the first year of my business, or whatever year for your business, then that means that I have to make $300,000 in sales and revenue. If I don't make $300,000, that means I have to bring whatever amount that I actually brought in. Let's say it was $200,000. So I have to break that $200,000 down, divided by 3, right? And that $200,000 divided by 3 then is telling me that I am only going to be able to actually take $66,000 in a nutshell, right? Round it off. You can round it off to 67,000. But however, it's not 100,000. That was the point of those videos, to show when we're talking about how much money we're going to make, we have to include the revenue of the business, because even though you may pay yourself $100,000, your business still suffers in silence because you're not taking care of the expenses that your business has. So you want to make sure that before you pay yourself, you want to look at that profit and loss statement. You want to know, what is the financial health of my business? How is my business doing financially? Okay? Right? A quick note about using financial software. If you do not already, right, use it, start today. Start today and use it. Like I said, QuickBooks is one of the most prominent management softwares for bookkeeping. It definitely helps you, projects and shows you what you have, what you will have based upon projected insights that is already taken in. It's going to tell you what you can do in regards to your money and how much you can actually afford to pay yourself. And that's information that you want to know, because when it's time to pay yourself, you want to get paid. You don't want time. No. It's just like when you working a 9 to 5 and they come telling you they can't pay you, you don't want to hear that. You don't want to hear that. So you need to make sure that you meet the numbers that's required to be able to pay yourself what you need to be able to pay yourself. So you need to break those numbers down into months, into weeks, so that you can understand how to pay yourself, right? And how much you can pay yourself. But if you don't meet the numbers that you've already put out there, then you know that you can't pay yourself X amount of dollars and make your business suffer because you feel like, well, as long as I get paid, that's all that really matters. No, as long as your business stays established, that's all that really matters. Because remember, we decided that we wanted to start a business and we wanted to become a successful business owner. So in doing so, that means that we have to then learn how to give up sometimes what we think is right so that our business can actually excel, right? Because if our business is excelling, that means that no matter where we are, right, in our personal parts, right, we will eventually reach the levels that we want to reach, right? Because we're following the steps that we know that we need to follow to ensure that that is going to happen, right? Exactly. So there are many practical reasons to purchase and learn how to use off-the-shelf financial management software. If you are unfamiliar with how to use it, take a course at a local community college, HCC, USF, University of Tampa. They have courses that are free online. Coursera has free courses online. There are even free courses online on YouTube that YouTube will teach you how to do these things for free, how to work and how to operate your books in a way that even if you don't want to use the system, they'll show you how to do your bookkeeping by hand, if that's what you want to do. If you're old school and maybe you don't have all of that kind of stuff and you don't want to deal with, you already had to learn how to use Facebook and all of this wonderful stuff and everything, you don't want to learn how to use another system, that's fine. Just learn how to keep your books on your own, okay? financial statements. Financial statements are another form of a report about a business financial health, right? And cash flows. There are three basic statements: the balance sheet, the cash flow projection sheet, the profit and loss statement, also called an income statement. The cash flow projection is also called a cash flow statement as well. So the profit and loss statement is also referred to again as an income statement. So we do not have enough time definitely to go through all three of these statements in great detail. However, you can refer again to the information that I do have here. I do have some of those sheets here. So, and I'm just gonna take a moment here. All right, there we go. So the profit and loss statement is the best tool for knowing if your business is profitable. And the formula for a profit and loss statement is going to be the sales, incoming money, right, minus the cost of goods sold, right? So the sales minus the cost of goods sold, that equals the gross profit. Then you have to subtract overhead, right? Because remember, the budget that you're going to create is going to be a budget that is sectioned off to tell you, is it cost of goods being sold or is this under overhead, right? So if whatever is under overhead, you're going to subtract the overhead from the gross profit, right? And when you subtract the gross profit and overhead from each other, that's going to equal out your net profit. So the formula again is your sales, your income and sales, that's your income and profit that's coming in. And then that's going to be minus the cost of goods sold, right? That's equaling your gross profit. Then you're going to subtract your overhead, which is going to equal your net profit, okay? So sales, also called, as I said, the income or revenue, the total amount from selling your product or service during a certain time period, okay? The cost of goods sold is going to be the total expenditure for inventory items which customers buy. Cost of goods sold consists of the cost of purchasing the items, right? The freight, the manufacturing cost, the modification cost, and packaging. For services, this is the cost of providing the services, including labor, material used, and transportation, right? So transportation, material used, that, right, my paper that I had to print out is in color, so somebody got to pay for it, right? Okay, I'm just saying, right? The cost and the labor. So for me to print this out, pick it up from the printer, sit down, separate it, and put it together, that's labor, right? In regards to services, right? The gross profit is going to be sales less cost of goods sold. Sales, in other words, sales minus the cost of goods sold. The overhead is considered expenses associated with your ongoing business operations, such as rent or utilities. The net profit is going to be the gross profit less the overhead. So that means the actual gross profit, which is sales less, minus the cost of goods, that's going to be your gross profit, Now, to get the net profit, you're going to again subtract the gross profit from the overhead. And that's going to give you your actual net profit. That is going to tell you how much your business has made. And then in telling you that, it's going to tell you how much you can pay yourself. Okay? And also, this is an important part that's not up here on my screen. So I want to put it out there, right? On this information, all quality business accounting software programs compile a profit and loss statement at the push of a button. So QuickBooks, any do that for you at the push of a button. They tell you your profit and loss, right? So you want to print this out regularly to track your business financial progress, right? And you're going to use that statement as the basis for building a cash flow projection, okay? So I'm going to show you an example of a profit and loss document here that you would typically go ahead and print out. So this is an example of a profit and loss. Right? Again, if you find value in this video, please like and subscribe and comment and share. Also, if you want a copy of these documents, of this information, this valuable information, please put in the comment box, send info. Do so with your email address so that I can have that information. Again, this is a profit and loss document. This is what a profit and loss document should pretty much look like. This is how you want it to look. Right here at Next Level Bound Workshops Incorporated, we are about educating you, helping you to know exactly what it is that you are supposed to be doing. If you need assistance with these things, with this profit and loss statement, then please let me know. Contact me, call me, 813-560-3021, text me. You can also come down to my office. I'm here in Tampa, Florida, 400 North Ashley Drive, Suite 1944. Again, that is 400 North Ashley Drive, Suite 1944, Tampa, Florida, 33602. My number again is 813-560-3021, right? That's for anybody that wants to actually come in and I can do this consultation with you, not a problem. And if you want, us to go ahead and help you with your financial advisory as a business owner, we can definitely assist you. Now, this is your cash flow projection sheet. Okay, this here is going to be your cash flow projection sheet. This is what it should look like. It should resemble this somehow. It needs to resemble this. If your cash flow projection sheet does not resemble this, then we need to talk. Because we don't want you to be in trouble when you're trying to grow your business, when you're trying to do some major marketing for your business, when you're trying to do some major growth hiring for your business. We want you to have the right information to be able to make the right decision, right? So again, this is a sample of a cash flow projection sheet. If you need a copy of this information, if you want a copy of this information, please put in the comments, send me a message, DM me, whatever you need to do, and say, send me the info with your email address. Again, all right. We're almost done. And then it talks about here the balance sheets. So I don't think I don't have a balance sheet, but pretty much your balance sheet is going to be the equivalent of the starting point of the amount of money that you have coming in, right? And then taking that amount and doing it, your expenses, your inventory, and blah, 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 so forth and so on, and then telling you what you have left over in regards to that. That actually makes up, right, what I said before, your financial folder, right? Now we're going into where we want to talk about what's in that balance sheet in total. It has a little bit more details, so I do want to go ahead and go over those details because it's definitely important for us to know. So I'm going to provide a high-level overview only because there is definitely more detail for you to read, of course, on your own in regards to that particular information. A balance sheet reports the dollar value of a company's assets, liabilities, and owner's equity as of a specific date. Assets includes cash, accounts receivable, inventory, investments, land, buildings, equipment, and some intangible items and other assessments as well. Liabilities, of course, are the debt or obligations of a company that includes loans payable, accounts payable, taxes payable, and more. The owner's equity shows the amount of assets that came from the owner and not creditors. Okay? The balance sheet tells a story about the assets your company controls, such as cash, equipment, and inventory. The balance sheet explains who owns those assets, right? Whether it's someone else like creditors or yourself, the owner, which goes back into the owner's equity, right? How much working capital, meaning how much cash you have to run your business, and if the company is highly leveraged or carrying too much debt. In other words, the debt to income ratio within your business. So, we are going to, let's see, because I should record it down somewhere. I'm supposed to have a balance sheet for you guys. But I don't see one in here. Excuse me. And I will just have to print one and somehow insert it into the actual packet that you guys are going to be needing in regards to this information. So, past that, I'm just going to pretty much skip past that information. Cash flow, like I said, I have the cash flow sheet as well. As with the balance sheet, as we did already look at, okay, it can be defined in two ways. The balance of cash received less the amount of cash paid out over a period of time, moving cash in or out of your business, okay? That is what we are concerned with in relation to cash flow, right? And I do actually have another workshop that we have available called cash flow management. So if that's something that you want to participate in, definitely get with me and let me know. Now we're moving on to cash flow projection, right? This is something that I previously mentioned, right? A financial statement using assumptions to forecast. It's pretty much what it is. It's a cash flow projection, right? And it's a financial statement that tries to show you how cash is expected to flow in and out of a business over a future period of time. A cash flow projection is used to see if projected cash receipts and flows, right, will be sufficient to cover projected cash disbursements, outflows, right? A business can be profitable and still run out of cash. As an investment banker might say, cash flow projections provide the visibility needed, to avoid liquidity, pretty much liquidating your business, having to close your business or having to get additional loans or whatever to have someone to potentially take over your business because for whatever reason or another and for whatever time period or another, in order for you to catch up on whatever debt to keep you from going into bankruptcy or closing your business. In other words, a cash flow projection is a tool to help you manage your cash so you can pay your bills on time, all the time, right? And keep the doors of your business open, right? In a nutshell, a cash flow projection helps, especially even now with business owners who have had to close their business, who will have to close their businesses, or who are anticipating on the very thought of closing their business. This cash flow projection helps you move your foot back into the right direction to understand where you are financially. How can you use what you have now to benefit you to continue to move forward? Going back to the other sheets, the other information that we talked about, profit to loss, the balance sheets, the other sheet, because there were three: the balance sheet, the financial statements. So yes, all of those financial statements, the balance sheet, the cash flow projection, and the profit and loss statement, all of these will be beneficial to you to help you move your foot back into the right place where it needs to be, to definitely make sure that your business can continue to run, and not just run, but be successful. We want a successful business. All of us want a successful business, and this is something that will help put your foot back into the right place when we are looking at this information. The next thing here that we're looking at is going to be okay. I went back up. So how can a cash flow projection help, right? And when do I need one? So first, you need to set sales and expense goals. You need to determine break-even points. You need to plan equipment purchases for replacement or expansion. You need to determine cash needed to purchase inventory for seasonal cycles. Okay? All of this needs to be in place. A cash flow projection is a great tool for setting these sales goals and for planning for expenses to support those sales, right? In other words, what is needed to actually get these sales? How can I start the process of getting sales? So I first need to understand what I need to have. Do I need another computer? Do I need another cell phone? Do I need another system? Do I need to buy into a program? Do I need to pay for a firm to take over certain parts of getting sales agents or getting sales period coming in? Plan the expenses for sales, for your campaigns, how you're going to set up your sales and know exactly what is required in that, printing, advertising, marketing, branding, all of that is a part of your sales, right? So a related use for a projection is to determine your break-even point during a startup or expansion phase. If you need to plan for a large expenditure such as an equipment purchase or move to a new location, a cash flow projection is the perfect tool, right? Similarly, if you have a seasonal business with large inventory purchases, a projection can help you have the cash on hand to make a large inventory investment when you need it. Okay, so primarily a cash flow projection pretty much helps you, even with your budgeting, it helps you to know exactly how much money is needed or required to be able to do whatever it is that you need to do. And in doing so, helping you then formulate a budget that will back up that cash flow projection, right? Because you're trying to meet the cash flow projection. In other words, you're trying to meet what is said to be required in order to be able to do what it is that you need to do for your business. All right, a profit and loss statement can mask cash shortages if you use accurate accounting. However, a cash flow projection helps you see the cash status of your business now and plan into the future. Okay? A cash flow projection is a good way to prepare and plan your financial needs and is often a required part of a business loan application. And this is true. This is why, once again, I will say it. That's why this is one of those items that will go into your financial folder. And if you are one of my clients dealing with a business plan, operational agreement that you need to get together because you are an LLC for loans, creditors, for a banking account, or whatever reason that you need an operations agreement, I can definitely assist you with those. However, again, you do need to have that financial folder, and that operations agreement would be something that also goes into your financial folder. This financial folder is, a few pieces of paper at most that's continuously being updated. And as they are being updated, you have one for every month. Again, like I said, you have one for every month, and then you have so many months that you put them into quarters, and then you have each quarter broken down, that those finances are broken down quarterly. And then you also have your yearly, where those financial goes from quarterly to also yearly. So you're not stuck with a lot of paper, but you have your documents to where that if you need to apply for a loan, you can apply for the loan, right? Without a problem. You have everything that you need in a folder, right? For whatever time frame that lending company or financial institution needs documentation for, you can provide it to them, okay? So we already showed you the cash flow projection sheet, okay? So in each of the cells of, and we're talking about the columns, right, of that form, and I'll pull it back up here just to show you guys again. Cash flow projections. Right? Cash flow projection. So each column and each cell, right, you want to see we want to increase. The plan here is to show how we want to increase cash flow, right? So this is what this is going to be really primarily talking about, how we can increase cash flow, right? Increase the number of items sold, right? So, however, you do want to start with your actual bottom line number of what you actually have beginning, right? But you want to start with, increasing the number of items sold, increase the price, reduce expenses, right? Change the timing of expenses, save money to have sufficient opening cash to get through the startup period. So again, this goes hand in hand with a budget. This goes hand in hand with the budget, because that budget is pretty much saying I need X amount of dollars, and this is saying yes, you need X amount of dollars, and this is how you need to carry out those X amount of dollars to make it all make sense. Because if it don't make sense, it's not making money, and if it's not making money, then it don't make sense, right? That's just the bottom line. I know, I understand. You'll get it. I hope you got it. But if you don't, then I hope you get it later, okay? Right? Save money to have sufficient, then obtain sources of cash other than sales, such as a line of credit, right? This goes back to business credit. This is why this is definitely something that is included into my business credit package, which currently, by the way, let me pause for a moment to say that the business credit package is currently $250, which actually is for 3 months worth of service. And in those 3 months worth of service, you'll get things such as this, more thoroughly taught, should I say, and also actually hands-on help you to begin to formulate these things for yourself. So not only are you being taught it, but I'm actually helping you directly to formulate these things, right? So with that being said, that's $250 valued at anywhere between starting at $750 up to $5,000, depending upon the time frame. But however, it's $250 for 3 months worth of service, and you will definitely leave with way more than what you paid for. Anytime you're dealing with Next Level Bound Workshops Incorporated, you always will have more than what you paid for. That's a promise and a guarantee, okay? And also, you want to make sure that you reduce or change the timing of your owner's draw, right? Because again, if you're not making the money, right, then you need to not take your income, right? So you need to make sure that you project your owner's draw and you know what your owner's draw is. And remember, it's a projection. It's just a projection. It's just to say that this is what should happen, right? This is a possibility of what should happen. Then we're getting into, research vendor options for buying inventory at a lower price or obtaining credit from vendors, right? So again, business credit. You want to research your vendor options. You don't want to just hop on the first thing that you see because that seemed like it was a great deal. Just because that's the first thing you saw and it appears to be a great deal, it may be a better deal somewhere else, or you may be able to get credit from a vendor to be able to get the same thing that you need. So you always want to explore your options, right? Explore your options. Don't get caught up with just one option. You need to have more than one option so that you can see how this, again, projected, how that will play out for you, okay? The next thing that the cash flow projection is going to do is going to help you establish policies to get paid sooner from customers, okay? Respect yourself first, respect others next, that means your clients, and then respect your business. Put some respect on your business. Make sure that you are getting paid sooner from your customers. Figure out a way to get paid sooner from you, because the quicker you get paid from your customers, that means the quicker you can add that into your overall income that you're bringing in from sales or whatever. Okay? So, right, we've already... Okay, so this is just a little bit more detail about the profit and loss statement, which we know that it is definitely the best tool for knowing if the business is profitable. We know that the profit and loss statement measures revenue, in other words, called sale or income, and expenses over a month, quarter, or a year, right? Which I have already put out there. You want to do it month to month, as well as quarterly and also yearly. You want to have those profit and loss income statements to show that information. Okay, with it, you know if you definitely have made a profit, and you know how much, or if you have incurred a loss. And if so, how much of a loss have you incurred? Okay, so the most important financial management report is going to be your profit and loss statement, right? This is going to help you with all of your business decisions and everything. It's going to help you to know what it is that you need to have as it relates to your income and how much revenue your business has coming in. Let's talk about business financing. What is business financing, right? What is business financing? Business financing is getting the money you need now to start, operate, or grow your business. Okay? So business financing concepts are included to be equity financing versus debt financing, and financing working capital versus financing fixed assets, right? So the following items are core elements in business financing: equity financing, invested funds that stay in the business, often permanently, right? So for most small businesses, equity comes from the owner or from family savings, and is frequently the only source of funds for startup small businesses, right? For large, fast-growing, quality companies, venture capital can sometimes be assessed for equity, okay? So in a nutshell, the equity financing, which is why you want to make sure that you have a business account, because that equity financing is going to show or give you an opportunity to actually take a loan out on your equity. Just like your house has equity, your business has equity. But if your business is tied into your personal, your business has no equity. This is another reason why you want to have a business account and you want to build business credit. Because if you don't, your business has no equity. It has no equity at all. So you need to have everything set up in a way where your business is actually building equity, okay? Debt financing, I talked about that earlier in regards to the invoices, okay? So debt financing is borrowed funds that are paid back. The cost of debt financing is interest paid to the lender, right? So the debt financing, again, are invoices that you have from your clients or customers that have not been paid in full. So for an example, again, if that total is $10,000, then you can actually go get a $10,000 loan, in this case, reimbursement from the lender. They're going to then take the invoices, which means at this point you cannot collect on those invoices. They are going to collect on those invoices, and you already have your $10,000. If they cannot collect on those invoices, then they will then pretty much tell you the terms and conditions of how that will work. But typically, most times with things of that nature, you should not have any problems in, the lender getting their money. Working capital, used to acquire funds needed to run the daily operations of the business, such as inventory and overhead expenses. So the working capital comes into play when we're talking about, like I said before, the income that's coming in. That account is where the money is going out to the expense account and also to payroll, which is to pay yourself and any other employees that you have working for you. Okay, your fixed assets financing, used for purchasing equipment, vehicles, and real estate. So you can purchase vehicles and you can purchase real estate with your business, right? So, but this is pretty much assets that hold value that you can use to leverage you to get financed to be able to purchase more equipment or a vehicle or more vehicles or real estate or more real estate, depending upon your business needs. So what are the do's and don'ts for small business financing? Invest your own money, which, again, this is why this is included into the business credit package that I have, because most of all of this is implemented there. Invest your own money, earn the right to borrow, show profitability, understand and keep working capital, be lean on fixed assets, and match sources and uses of funds, right? So all of this is detrimental. It's detrimental. Hey, Devontae, it's detrimental to the understanding of, of the business finances, right? So invest your own money. You need to invest your own money first, which, again, I talked about this previously, something that I include into the business credit 101 workshop package that is $250 for the month of April. Again, invest money into yourself, right? First, before you ask for equity or debt from other sources. Having your skin in the game shows your commitment and also shows your skill in running a successful business. Put money into your account. If you have $50, send $50 to your business account. If you have $100, send $100 to your business account. Build the equity, build the account up. Show that you are invested into your business. Show that you want your business to grow. Show that you are willing to put your own money at risk in order for your business to grow, to develop, to expand, right? Earn the right to borrow, right? Generally, borrowing is not a right. It's not a right. I need all of us to understand as small business owners, just because you went and got an LLC or incorporation or what have you with an EIN and you went and did the right steps to establish your business credit profile and all of these wonderful things that you did, we don't have the right to then borrow. In other words, it's not something that's supposed to happen because we did XYZ steps. It's nothing written that says we're supposed to get right off the back XYZ amount of money because we followed XYZ steps, right? It is a privilege, right? Business credit is a privilege, right? It's not something that we're supposed to have direct access to because we are business owners. It is a privilege. So to obtain others' investment in order to get the bank, in order to get lenders, in order to get anybody to give you money to put into your business, not as a customer, not as a client, right? Right? Just simply, I'm giving you money to put into your business, right? In order to demonstrate that, we have to show, right, that we honor this privilege, that we appreciate the privilege to even have you interested in my business, right? So I need to demonstrate my ability to manage debt well and run a profitable business, right? I need to run a profitable business. Show profitability. Profits are what lenders or investors want to see. No lender or investor wants to see you not making money. They all want to see that you're making money and you're hitting the bottom line. So those numbers that you put on your cash flow projection, those numbers that you put on your budget, those numbers that you put on your profit and loss statement, those numbers, the numbers that are positive, that's going to help you meet, to stay afloat of everything, those are the numbers that investors and lenders want to see. They want to see that. If you want money to start coming into your business somehow, some way, if you want lenders and investors to start pouring into your business, show them that you appreciate the privilege and the honor to even have them to be interested in doing so by doing the first step and actually showing them that you are business financial savvy, that you got it. You can pull your financial folder anytime they get good and ready, they want to see it. Here it is. I don't have to say nothing. I could just send you the document. And if you think that you want to invest in me, and if you feel that you want to put money into my business account, by all means, do it. Okay? Understand and retain working capital. Experienced business owners, right, know or should know that working capital is critical. On the other hand, working capital is sometimes overlooked or misunderstood, right, by new business owners or even old or current business owners. As your business grows, however, the amount of working capital cycling through the business to support operations should grow, should never be the same. This is why your business plan should always be revolving. It should always be growing, thriving. That business plan should always be updated because something is always changing. The goal is to grow, plan to develop, plan to grow past what you initially projected that you were going to grow, because that's how you set yourself up for success. And when lenders or investors or people that want to give you money are looking at that information, the first thing they see is, oh, he's planning to grow. Let me invest in him because he has growing potential. He has potential. That word potential will stick out in the information because they see that you did show potential into your investment. Even if you start off with a small number right now, but when they see the potential, they're going to then invest or give you money because they see the potential. Okay? Be lean on fixed assets. New business owners sometimes think they need to purchase fixed assets to start or grow business, right? Fixed assets consume precious working capital through down payments and monthly loan payments. So whenever possible, new business owners should definitely try to buy as few fixed assets as possible. When occurring fixed assets, new business owners should consider buying used assets or leasing the assets. All right, it helps on some of those expenses. Like if you got to buy a vehicle, a cargo van, then you lease it. Because when you lease it, they are responsible for the oil change. They are responsible if the engine goes out. They are responsible if the transmission go out. They are responsible for the tires. They are responsible for alignment. They are responsible for tune-up. Those are additional expenses that you would be responsible for if you just outright purchased the vehicle. You also have places like Toyota, who actually has a plan that you could pay for. You still have to pay for it, but the good thing about it is that it covers your vehicle for all of those services. Roadside assistance, so you don't have to pay for that every month. Windshield, if something happens with the windshield, it's covered. So you have plans set in place with certain car dealerships, and even independently of a car dealership, they have plans that actually, so even if you purchase the vehicle, outright, they have plans, it would be an additional expense, needless to say. However, at the end of the day, the bottom line is that even if it is an additional expense, it's still not something that you would have to pay for out of your pocket outright. Okay, y'all gonna see me keep switching these phones, and we are almost done, but you're gonna keep seeing me because I got them. I got them on the charger, because apparently when I go live, it tends to eat up a lot of juice for whatever reason. So, however, definitely be lean on that. Don't try to do a lot of fixed assets. Okay? Match sources and use of funds. When financing current assets, right, accounts receivable and inventory should be financed with current liabilities, meaning line of credit or credit card. Fixed assets should be financed with long-term loans that match the use life of the asset. New business owners can make the mistake of buying a fixed asset with short-term debt, forcing them to pay for an asset faster than that asset can generate profits, right? We don't want to do that. for the loan repayment. We don't want to do that. So we want long-term loans. We don't want anything short-term. We want it long-term so that that asset can begin to generate profits for us. Because if it's not making money, then it's no good, right? Give it back. Send it back. Understand your financial statements. Most types of financing require an application process that asks for business financial statements, such as your profit and loss statement, your balance sheet, and a cash flow projection. You want to know your financial statements well, right? You need to know it like the back of your hand. You need to know it like you know your Social Security number. You need to know it like you know your ID number, if you know your ID number, right? You need to know it. You want to know it well and be able to discuss them intelligently with a lender, okay? Understand your collateral options. Most loans require assets. Collateral, be pledged as security for a loan. In the event a borrower defaults, right, on a loan, the collateral may be sold. You need to understand that. Be prepared to discuss collateral options with your lender. Let them know what you have that you could put up for collateral in order to get that loan, if that's what it takes, right? Understand the risks and costs for a loan types. Each type of loan carries, right, associated risk and costs. For example, while a credit card may be easy to use, credit card financing may be a very expensive form of credit for you, right? In many cases, a small business loan guaranteed by the SBA will be a better form of loan than a credit card. In many cases, not necessarily always, but in many cases, right? There is a common mistake, no grants. There is a common mistake belief that government grants are available for businesses. With a few rare exceptions, grants are not available to business owners, okay? Now, I'm going to interject again and say that there are grants available for business owners, but these grants that are typically available for business owners in relation to a income for-profit business, right? Those grants are going to be term grants, right? And term grants are pretty much means that if you do this, you won't have to pay the grant back. But if you don't do this, or if you falter any kind of way over here with this here grant that we done gave you, then you're gonna owe us money. So you never want to get into a position with a grant where now the grant has turned into a loan. So anytime you're looking at grants, grants are primarily for non-profit businesses and or organizations, and also grants are primarily for businesses that are operating to solve a particular problem that the government sees that they would want to fund that business for, okay? So that's what we need to understand about grants. So it's not necessarily for profit businesses, even though you can get for-profit business grants. However, they are term grants that if you do this, we will fund you this. But if you ever stop doing this, then we will no longer fund you, and that grant will then become a loan, which means you have to pay it back. We don't want that. So this is why this information is indicating no grants, okay? It's not a terrible thing. It's just that's the perspective that they see. They don't want you to fall into, and I don't either. I don't want you to fall into a grant that is a term grant, which would leave you potentially to owe because you faltered. Maybe you started out doing whatever the grant required you to do, but then for whatever reason you stopped. And because you stopped, now that grant has become a loan and you have to pay it back. So anytime you're looking for a grant, be sure to thoroughly search, use a magnifying glass to make sure that you have covered everything in regards to that grant, right? So, shop around. Shop around for the best loan. You may want to start where you already have a personal relationship, like your bank or your credit union or a credit card company that you're already in good standing with, all right? Check out SBA loan guarantees available at most commercial banks, okay? Get expert advice. You can get mentoring and advice with the SBA. You can get expert advice from myself here at Next Level Bound Workshops Incorporated, right? Do not rule out banks, especially ones with which you have a good working relationship with. The FDIC has educational resources as well. So even if, and that's the federal department, Lord, I forgot, but that's who that is. That's the ones that pretty much ensure the money inside the banks, right? So that's who they are. I know who they are. I know what they do. All right, that's the most important part. So in this information, I'm not going to finish because the main point of this information today was to present to you pretty much, how to set up your finances and how those setup of your finances, how the setup of your finances will impact the structure of your business as it relates to making money and leveraging that money to work for you and your business, okay? And in doing so, you set yourself up for so many opportunities, just like point and reference to yourself, right? FYI, you can actually, even if you did not file your taxes, this is how vital and important your financial folder is. Even if you did not file your taxes, you can still use your financial folder to qualify for PPP loans, to qualify for SBA loans, to qualify for the EIDL grants, to qualify for the EIDL loans. You can qualify for that because you have your financial folder, of which we've talked about, right? What's in the financial folder again? The financial folder includes your cash flow projection statement, your profit and loss statement, and also your budget, okay? So it includes all of that wonderful information, monthly, quarterly, and yearly, updated consistently, right? So again, I definitely hope that this video today that we talked about business financial management, I hope that this video was helpful to you and that, you will begin to share, like, comment. If you want me to send you the documents of which I went over to show you the different forms and everything that you need, please comment right on the video to let me know, hey, send info, right? So that I can know to go ahead and send you the information, right? Send the info with your email address so that I'll know who I'm sending it to, right? so that way I can go ahead and send you that information. Okay? So I definitely thank you so much for tuning in. Please, again, like, comment, share, right? I definitely appreciate it. Thank you so much for watching, and I do appreciate all of the views that you guys have given me. It's definitely helping me, and I do appreciate it. Thank you for the likes. I thank you for the comments. They are definitely appreciated. Again, my goal is to begin to monetize and also help my fellow business owners and those looking to become business owners, right? To succeed and be successful and to set up your businesses the legit and prominent way that will help your business go to the next level, right? The goal and the goal mission statement for Next Level Bound Workshops Incorporated is preparation for the next level of success. So that is our mission, that is our goal, that is our overall concern, is to prepare you for the next level of success. And if we did not do that, then we are failing you as business consultant, right? So I definitely want to commend you today for watching this video. I want to commend you today for picking up your phone to call us at 813-560-3021. Again, that's 813-560-3021. For calling us, texting us to tell us that you want to set up your consultation, right? The consultation, if you're calling and want a consultation for business financial management, that consultation will be free, seeing how we have went over a vast of information here already. If you are calling in regards to this video, that consultation is free. Outside of this video, the consultation is $250 for any other services that you may need. We do offer many services such as business financial advisory. We offer training workshops in regards to customer service relations. We also offer services in regards to business credit management, to build business credit, to start your business credit profile, to help you get trade lines on your business credit, meaning to help you get lines of credit that you can actually spend for your business, help you to enhance, to be able to expand that as far as being able to then purchase a vehicle on your business credit, right? And also house, real estate, right? Getting real estate on your business credit. We begin to educate you and show you how to do that with the Business Credit 101 workshop package that we currently have for this month for $250 as well. So we have many, many services. You know, all you have to do is pick up your phone. And also this month, next month, the month of May, I did mention as well that the month of May, we are going to actually be run another special, and that special is going to be CPR, My Business Back to Life, right? CPR, My Business Back to Life, right? So CPR, My Business Back to Life, that is pretty much going to be a package that is going to be servicing for business owners who have closed, who have a desire to reopen, business owners who are on the verge of closing, business owners who are not sure if they can stay open. This is going to be definitely for you. It's going to have so many wonderful nuggets in this package to help you to, first of all, to get you back into the mindset of not closing. That's the first thing we want to tackle. We want to tackle the mindset of closing. This is going to include group sessions, counseling, because again, what people fail to realize as business owners, we need mental health as well, We don't need necessarily a psychologist or a psychiatrist, but we do need some form of counseling. We do need somebody that we can talk to and vent and talk about our day-to-day experiences, right? Stuff that almost made us lose our mind. So we need a counselor. We need somebody that we can talk to that can help us to just make sense of life as a business owner. So that package will include that. This package, I will have more information about it soon, right? So, and apparently I don't know how to count the days of the year, right? I mean the days of the month of April. And so it's not the 31st. Right, it's not the 31st of April, but it is the 30th. So April the 30th will end the current special of the Business Credit 101 workshop package, and then start the new package of CPR My Business. I do also plan on doing a workshop in regards to CPR My Business, and it will start and feature the participants that will sign up or has already signed up for the CPR My Business. If you do want to sign up and you want to be placed on the list as a client for that particular package, again, I don't have all the details necessarily written out right now, but I will have those details for you soon, and I will post them here on Facebook, Instagram, and all of my other social media platforms, including YouTube. I will also post it on the website as well, so that you can have the opportunity to go ahead and sign up. Okay, so I will have more information, like I said, in regards to it. I can't wait to go ahead and be of assistance to you, my small business community. I definitely appreciate you, those who have thrived to stay in business, those who, like myself, have a mission to assist all small business that I can. I definitely have a mission to help small businesses to become legitimate, to help them run their business on a broader spectrum, to make sure that they know that they are valued and that we appreciate you as small business owners. You know, if all small businesses close, it's a detriment. Do you not understand that even today, even right now in the White House, they are hands and knees to small businesses? If small business owners really would open up our eyes and understand the power that we have vested into the United States of America as a whole, right? Not just in the state of Florida, not just in the state of Georgia, not just in the state of California, not just in the state of Washington, not just in the state of Mississippi, wherever you are, no matter where you are in the United States of America, you have power and you have authority because you are a small business owner. Even if you just became a small business owner or you want to become a small business owner, you have power, you have authority, right, in the legislature, right, in regards to how everything is working. They are on hands and knees trying to figure out how to assess and assist the small businesses from closing, because they know that small businesses are the heart of the country. If every small business were to shut down right now, it would be a detriment. It would be devastating. It would be just dramatic on how you think that COVID-19 have caused an issue. Close down every small business. No matter how big, no matter how small, close down every small business there is and you see how that would be to your government, it would be detrimental. It would be devastating. It would cause a total pandemic. And not because of COVID-19, but because small business owners have decided to stand up with each other, not against one, not until I get mine, and then when I get mine, I'm out of here. But I'm talking about truly standing up for one another and truly standing in with one another until every single small business owner has gotten what is due unto them. And that is our EIDL grants. That is all 15,000 or 20,000 of our EIDL grants that we were promised, that we were supposed to get. No matter all of this extra stuff that they're trying to throw in, a lot of the business owners are in a income, restricted, area because of COVID-19, right? Because of COVID-19, most of the communities are in a deficit where the income ratio is not the same. So where they're saying that you have been denied, contact me today. I will be more than happy to go ahead and assist you with that reconsideration. It's not the end. If you received an email saying that your application was denied, contact me today. Okay, I have already talked to the SBA and I know that we can fight this. I'm in it for the long haul. I'm not here for today and then after today I'm gone, or once I get what I was supposed to get, I've left you all by yourself. But I'm in this for the long haul. Preparation for the next level of success. Next Level Bound Workshops Incorporated. Again, my name is Paul Weston. Thank you so much for tuning in again. Please like, share, comment, and if you're on YouTube, subscribe. Thank you so much for doing so. Thank you so much for sharing. Thank you so much for your comments. And again, if you want the packet of information that I have discussed here on today, please go ahead and put in the comment, send me the information. I will only send you the information. I promise it's not a sales tactic. I'm not going to send you anything else other than the information that has been requested. But I am only going to email it. I am not going to send it via a link. I am not going to send it any other way than an email. So if you want the information, just go ahead and send me on the comment or DM me, whatever way you're comfortable with, your email so that I can go ahead and send you that information. It's been a great talking to you guys. Have a great night.